Hello and welcome to another episode of the Investor Financing Podcast. And I'm your host, Beau Eckstein. And today we're going to talk about how to find the best multifamily loan rates. We got to look at the strategy first and then decide, together what makes the most sense as far as what is the best loan program or rate program for you. So there's so many different buckets. So really we start with the conversation of the project itself and your experience, your net worth, and then we dive into, what realistically is going to be the best program for you.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio.
Hello and welcome to another episode of the Investor Financing Podcast, and I'm your host, Beau Eckstein, and today we're going to talk about how to find the best multifamily loan rates. So the big question usually with borrowers or sponsors, right, is what's your rate? What's your rate? What are your terms? And that is it depends, right? It depends on the property. It depends on the sponsor. It depends on the strategy of are you going to hold it long-term? Is this a short-term play? There's a lot of different, so your rate might not be the most important thing. Obviously, long-term holds, rate and cost do play a big factor in it, and also leverage, right? How much leverage are you getting, right? If you're getting 80% leverage versus 60% leverage, that means you have to bring in a lot more equity, which dilutes your returns. So we got to look at the strategy first and then decide, together what makes the most sense as far as what is the best loan program or rate program for you. So we can talk about if you're holding the property long term, hands down, HUD right now, their programs are 35-year fixed in the low twos potentially for you, right? At this time in this market, the low twos fixed for 35 years. That means you don't have to refinance after 5, 7, or 10 years. That is unbelievable, right? So if your project fits those certain kind of thresholds where it's a good fit for that box, the property is in good condition, occupancy levels are fairly high, there's not a lot of capex needed, not a lot of value add, that's probably the best long-term financing you can get.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
And now a word from our sponsors. Want to save money on your taxes? Cost segregation is a strategic tax planning concept that saves money by deferring federal and state taxes through accelerated depreciation. Get a free benefit analysis today. Please visit costseghub.com for more information on cost segregation and all of our cost recovery services that can put more cash flow in your pocket.
Maybe you have a 5 or 3 to 5 year exit strategy, so maybe an agency loan would be a better option. A little bit less leverage, typically 80% of purchase, right, or of cost versus maybe 85% on a HUD program. But you're going to have a prepayment penalty, typically of some degree, whether you go into they have a floating product, but their standard programs are usually a 5-year prepayment penalty. So if you're trying to exit out quickly, that might not be the best option. Maybe the best option is to do a new no prepayment penalty program, because you're going to refinance in 2 years, because you're going to do a quick bump to the rents, or maybe there's some capex and you're going to force some appreciation in the property. So oftentimes those are kind of the questions we want to dive into before we say, well, what's your rate and term? Because it depends, right? We got to look at these factors to determine what the best financing strategy is, because we don't want to lock you into a prepayment penalty. If you're going to trade the property quick, maybe HUD's not the best program. Maybe you don't have the sponsorship requirements to get agency debt. Okay. So maybe a credit union or banker are the best. So that's how we evaluate on your exit strategy, the sponsors themselves and their financial statement and their experience. So that's how we place these deals in certain buckets depending on those factors. So I hope it helps. When it comes down to best multifamily loan rates, It depends, but there's rates in the low 2s right now. There's rates in the 7s for bridge money. There's rates in the 8s for bridge money. There's even 10 and 11% money for bridge loan programs for very high leverage where they'll finance almost the entire project. So there's so many different buckets. So really we start with the conversation of, the project itself and your experience, your net worth, and then we dive into, okay, well, what realistically is going to be the best program for you? Hope that helps. We'll see you on the next episode. Please like, subscribe, and share with your colleagues. And thanks for watching.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.